So this week, Lucid Motors shared on their Twitter feed a very exciting picture. A picture of a truck with 6 cars wrapped up, ready to go. Using the hashtag #DreamAhead, this indeed in itself is the problem. I feel that Lucid investors are missing the key factor here. They're too busy dreaming of making cash hand over fist and missing some very key points if you're looking at long-term or even short-term investing into this company. So if you're thinking you're gonna make bank on this company, I've got some bad news for you. In this video, I'm going to give you the very harsh truth and the very harsh reality check that many investors into Lucid stock desperately need. Now, as usual on this channel, we're not here to appease the masses. We're not here to go with the narrative, go with the grain. We're here to give you the harsh truth. If you do appreciate this type of video and this type of investing, playing devil's advocate if you will, then please do tickle that like button until it turns blue. And if you want to ignore me and get lifetime access to our chat room, sign up with eToro on the pinned comment, deposit, make a trade, and you do indeed get lifetime to our LWT Discord. Now, Lucid Motors is one of the more popular EV companies out there, and you've sort of got to give them this. They have got a beautiful looking car. In fact, I think they are one of the better EV startups out there if you have to invest in one. I want to get that out there right off the bat. They've proven they can do certain things in the right way. They're not Nikola just pushing a truck down a hill. They're building cars with a legitimate aim to sell them. And now that their factory is up and running, their stock is up over 70% in 2 months since the beginning of September, which is a staggering gain in itself. And it's obvious as stocks go up these days, they tend to get more and more attraction, and more investors are seriously looking at investing in companies that are already running. I don't understand it. I don't know why, because you should be investing on the ground floor, not the top floor. But nonetheless, this picture did get people excited, and even me, myself, because I think this car is quite good looking, got quite excited. The picture shows 6 cars wrapped up, ready to go on the back of a Lucid truck with the title Dream Ahead, which is true. There is big potential and big dreams with this company, but I feel like if you're looking at it strictly from an investment point of view, you seriously are heading into a hell of a lot of danger. I seen a video today on Lucid Motors from a guy called Sasha in the UK, a guy I sort of follow and have seen from time to time, and he's sort of talking about why he bought Lucid at, I think it was like $24, and he said he put in about 30 grand, or maybe even that's what it's worth now. But the big thing is, he's not buying it at its current price. That's what I want to get out here. There's many YouTubers saying this can go to the moon, but Sasha has a great entry point, fair play to him, but he clearly is not buying at this elevated price unless I missed something in the video, in which case if I did, let me know down in the comments. But even at his entry point, I feel his company was still overvalued, and I'll tell you why now. Despite the car's lavishing looks, this car comes with a economy price tag, the cheapest car they offer, of $77,000 US. Now, that in itself is a staggering amount of money, and I know there's going to be people saying, yes, that's what Tesla did originally, and then they brought the price down. But the difference is Tesla didn't have real competitors when it did this model. Right now, Lucid's got to compete with the big boy Tesla themselves, who are selling a car at pretty much half its price. So you've got to ask yourself, as a buyer of Lucid, would you rather want to spend double the amount of money to get a product that's newer to the market, where you might struggle to find parts in the future because it's still an emerging company, or would you like to buy a Tesla? A car that's been proven to be absolutely gynockapod in terms of gadgets, features. People absolutely love them. I don't know one person who's got something bad to say about a Tesla. I myself nearly bought one. And I'm not saying they're not going to sell any cars, but you've just got to sort of ask yourself, they're not going to sell the same scale as Tesla because it's half the fucking price. I mean, you could get a top of the range Model 3, the performance model, right, of Tesla, have 25k left over, rather than get the baseline economy model of a Lucid car. What person, seriously, what person would want to go and do that? Now again, I'm not saying that it's not going to sell. Clearly there'll be buyers of this car. It is damn beautiful, but 77 grand, you're not going to sell that many cars, in my personal opinion. They aim to sell, with their new factory opening, 90,000 cars in the next 2 years. But here lies another problem. The current market cap of this company at the recording of this video is around about $42 billion US, for a company that doesn't sell many cars, if any at all, right now. Now, to put this in perspective, if you are new to investing and you don't really know what a market cap is the total value of a company. A lot of people, when you start investing, you find a name and a price and you buy it. You see the chart, it goes up or down. You think $3 could be cheap and $20 could be high. It doesn't really matter what the stock price is. The market cap is the valuation of the company and a much more important metric than any price of a stock. When you buy a stock, you are buying a business, and people really need to start waking up and understanding this. This business is valued at $42 billion US, which is more than Hyundai. Hyundai produces hundreds of thousands of cars a year, and it's more than double Nissan. That's right, this company, which does not produce cars properly yet, is valued at double that of Nissan. And if you don't know how many EVs Nissan sells, well then just Google the Nissan Leaf. You'll be pleasantly surprised. Now I know Nissan Leafs are a lot cheaper and a lot more shoddy cars, if you want to call it that, than what this looks like and what this might even perform as. But the simple fact of the matter is, Nissan, as an example, already has the workforce, the technology, the staff, the know-how, doesn't need to dilute investors. It simply needs to convert its old ICE vehicle garages into EV ones, which do cost money, but definitely nowhere near as much as starting from scratch. So the good news is Lucid has a factory open, it has cars ready to ship. And let's say it does sell 90,000 cars to 90,000 people who prefer paying double than for a Tesla. Let's say they do find that. They've still got to spend money growing. They've still got to spend money marketing. Their return on investment per car, their profit margin per car is not going to be anywhere close to Tesla, let alone the likes of Nissan. They've got a lot of expenses to come, and that leads me on to my key concerns with investing into this company at its current price. First one is the big one, dilution. This company 100% will be diluting investors. It will be selling shares at the market, trying to raise capital so it can expand and grow. Now I know at this point a lot of new investors say dilution is needed for a growth company, yada yada yada, which is true. But this is not good for investors. If you are an investor into a business, you own a certain percent of that business. Now, if this company then goes and dilutes you and doubles the float, as an example, which seems to be happening more and more often these days, then now you own less. You own simply less of the business. Your total assets, percentage terms of this business is less. That is not good for an investor. Regardless what you think, yes, they need money to grow. Yes, it may increase the stock price in the short term, but fundamentals always, always, always catch up with a company eventually. The second thing is the price of the company. 42 billion market cap. It's already priced into its current stock price, its current market cap, how many cars it's going to sell in the future. It has to have. There's no way a company which does not sell anything can be valued at 42 billion. Stocks are forward-looking, prices are forward-looking. This already has extraordinary growth figures priced into its price. Let me put it another way to you, okay? You know that a price of beer at your local boozer is going to go up to $20 a beer at some point in the future, 20 years, okay? Would you pay $20 now? Because that's what you're doing with this company. You know it's going to go there at one point. You know beer is going to be more expensive, especially with Joe Biden's inflation package. But the point is are you going to pay that now? Absolutely not. It would be ludicrous to do so. Stocks seem to be the only thing where people do not like bargains. They like to pay more money for. When you go shopping, you want a bargain, you want a discount. But with stocks these days, people don't really seem to want that. And it's mental to think about. And the big concern with this company is that they have missed more targets than they have hit. This company has had delays after delays after delays, and I'm going to put my neck on the line here. This company will not sell 90,000 cars by this time in 2 years' time. It won't. It won't sell 90,000 cars. I'm going to go there and say it. If I'm wrong in 2 years' time, I'll shave off my beard. Someone come back in 2 years and remind me. If you think this company is a safe bet, go for it. If you're betting just a little bit of money, go for it. But that's the point. It's a bet. It's not a good, safe investment, and you need to see it as such. It could go up in value. I'm not saying it's not going to go up in value. We live in a crazy market where people want to pay extreme valuations for extremely, well, simple companies that don't even sell cars. So it could go up. I'm not saying it's not going to. What I am saying is be careful. Do not bet the farm. this company is definitely not a safe investment. You would be much safer investing, if you want an EV company, to invest into Tesla. And I can't believe I've just said that. The code word for this video is banana, so if you can drop that down in the comments, make sure that like button is turned blue. And if you want to know when the perfect time to sell a stock is, check that video out up there. You might learn something. That's it from me. Take care. God bless. Peace.